Hi, it's Lee, and welcome to the Tesla Economist. Another green day for Tesla. And not just a minor gain either, but actually approaching 260 now. Technical analysts were saying if we can break 250, then we could see 270, and from 270, then it might be a path to 300. Yes, technical analysts is a lot of if and then rhetoric. But either way, the CPI data was better than expectations, and the market is likely expecting the Fed to pause. Although we are far from out of the woods when it comes to inflation just yet. There is still the matter of all this additional money in the economy that was creating the boom before the Fed intervened. The question is, has the Fed just paused this boom, and will it once again ignite to generate an even bigger bull run once we see the chances of getting inflation under control and eventual signs of rates actually getting lower? Like I keep saying, it really feels like the market wants Tesla back to 300. Does that sound too good to be true? It was higher over a year ago, with less in the pipeline. So what's changed? Why can't we get back to 300? What caused this huge drop? Is it just demand and in turn affecting margins and profits? Well, yes, demand was insane, with huge backlogs in all markets, even after significantly raised prices. It looked like everyone wanted an EV and Tesla, and they were clearly the future. Except at the end of the year, the waiting lists went from almost half a year to about a month. They dried up in almost an instant. That major buffer was gone. Then the prices dropped significantly, but the waiting lists didn't return. Not even with huge tax credit incentives. The demand never came back like before. The important metric at the end of each quarter was no longer about how many cars Tesla can make, but how many are delivered, as Tesla went from supply constrained to demand constrained, indicated by the discrepancy between the two figures and the rising number of Teslas in inventory. Has this been the main cause for the reason Tesla's stock price is so low? Well, not entirely, of course. Let's not forget what started the fall of the all-time high. Initially, Elon selling shares to fund his options bonus, although he didn't let this opportunity go to waste and let the people vote on whether he should pay the most tax any individual ever has. And then it started. With Elon's new cash reserves, he bought a large stake in Twitter, and it eventuated in an offer to purchase the entire company. Okay, this isn't meant to be a history lesson, but this was arguably the main event that first took Tesla down and resulted in extreme lows. Investors also being put off with Elon's divisive political views, allegedly affecting demand of Tesla's largest target markets. And eventually, the institutions left, and short sellers had a field day, and margins got called. Now, we seem to still be climbing out of this drop. Sure, Twitter was not responsible for the price drops and the lack of progress for the new factories. Perhaps they all take their fair share on what happened. But Twitter seems to be nearly past us. The price drops seem to have settled, and demand seems to remain about where it needs to in order to meet supply. And Tesla have a backup plan to increase production that doesn't involve 4680s. Yes, we have more weighting involved, but we're told production costs will be well below parity of an ICE car, and especially cost of ownership. There are new events on the horizon with higher potential profits, albeit about 3 years later than Battery Day had us hoping. The macros clearly played a part too, but we have seen the equivalent tech stocks all recover. But the lower Tesla's stock price gets, then the more the market looks at it as just a car company. But now, with a higher, more apt PE ratio to its potential, it's being viewed more as an AI-type company. If other such companies are close to their highs, then shouldn't Tesla also? Okay, Tesla don't have the earnings to match, but their product is cars, which is cyclical, and we would expect profits to return when rates reduce and the economy has more confidence. The stock was down about $300 from its high. So perhaps each of these factors take on about 1/4 of the drop. Twitter, macros, lowered prices, and new factory disappointment. If there was a $300 drop, then if they each contributed equally, that results in a $75 stock price reduction each. So Twitter over, macros no longer scary, at least not so much for the market, understandable if you have your own concerns. Mexico has almost twice the capacity of Texas and Berlin combined, and price drops are now stable. So perhaps when the new CEO is in Twitter, we should have expected about a $75 total recovery from the Twitter fiasco. Macros are probably about a $50 recovery in the stock price, at least judging by other tech companies. Mexico offering lower costs and more production could even be argued as more than compensating for lack of progress from the other two factories. And price drops and margin reductions, perhaps a $30 recovery, as it doesn't look like that hole gets any worse. If we assign those arbitrary values to the stock price to these events, then that would be about a $230 recovery from about $100, taking Tesla to $330 stock price. I mean, this would also exclude progress in energy and bots and FSD, which arguably have also contributed to additional value to the stock price since the highs. Could this be a roundabout way to value Tesla's stock price? This isn't about earnings or as much about fundamentals, it's about potential, with seriously big ticket prizes. It's about FOMO of missing out on a company that has shown a path on how it can become the largest, most profitable company ever in history, with a CEO who can convince people by pulling off amazing engineering feats and judging by what Tesla have already achieved in the past. So instead of looking at earnings in the near term and predicting PE ratios, perhaps we take into account the market psychology and how it reacted to these other events. And since they have been somewhat rectified, we can then assign those values back. The same market thoughts, only reversed. And perhaps the weighting factor is off somewhat for some of them, but when we add them back in, we do get close to $300, even if we round it down a bit. This is the same market that valued Tesla above 400 before Mexico was announced, or the fact that Gen 3 could be half the production cost, or Giga Nevada expansion. Actually, even before the bot was announced. A product that could add more value to the company than the rest of it combined. So if the market takes a similar perspective of Tesla on how it is with other tech stocks, particularly ones with AI potential, then perhaps even the downsides that Tesla have had since its highs can now be outweighed by some of them being rectified and others being offset by even higher potential upsides. It's all psychology, very much so with Tesla, the madness of crowds. And perhaps there are indicators as to the level of said madness, like greed and fear indicators, or the level of divergence, but it's always going to be hard to predict what Tesla's stock price will do. Okay, sure, you might argue that this is all bullish, and I'm only acting this way because the stock is up. And yes, partly true, because the market has revealed to us more how it sees the values of Tesla. We are witnessing some of this psychology and trying to analyze what the market is thinking. The stock price is also a telling factor of the psychology of the market and not to be ignored. And okay, perhaps I could also make a video on why Tesla should be $100, but the market is showing us right now it's not that. This could be argued as efficient market hypothesis. Now, will Tesla be able to hold this new price tag, or will it drop back? Lots of people like to say they expect a pullback, but still no pullback. $300 was quite far from $160, so it will take a serious run to get back there, but it seems drawn to getting there. The thing is, aside from macros or major events, there isn't much reason for Tesla's stock price to drop. Elon set the bar very low this year. There aren't really any major targets to miss. Production barely needs to scale for the year. 1.8 million was about the run rate at the end of Q4 2022, so no pressure there. 4680s we were told won't ramp until next year, but investor energy on 4680 isn't what it used to be. Hopefully Mexico starts soon, but no one seems to be that concerned about that either. It really only leaves the Cybertruck for the year. As long as that vehicle gets into production, then Tesla's stock price could hold throughout the year. And of course, seeing the Cybertruck in production will no doubt boost the stock further. If it's already reached 300 by then who knows where Cybertruck could take it. So that's the main event to look out for this year. Hi there, I'm using Verbalate AI video translation and lip sync software. It's pretty amazing. Watch this.
I can translate my videos into other languages. For example, I am now speaking Hindi.
नमस्ते, मैं पहली बार हिंदी में बोल रहा हूँ, लेकिन Verbalate इसे इतना आसान बना देता है.
Or how about Spanish?
Hola, vaya, increíble.
También puedo hablar español.
Sign up at verbalate.ai today to gain early access to trial the product for creators and strategic partners, and gain the ability to translate and lip sync videos in all major languages. You can view the info in the description below.